On the podcast with us today is Kyle Mitchell. Kyle, welcome to the podcast.
Thanks for having me on, Dan. I'm excited to be here.
Well, awesome. Well, Kyle is from Cerritos, California, which is just right outside of LA. And we're going to be talking about a property that he closed recently, which is called Midtown on 2nd. It's a 42-unit property out of Tucson, Arizona. So we're looking forward to diving into this. But before we get started, Kyle, I want you to give us a little bit of a background about who you are and how you got into the multifamily space.
Yeah, sure. So originally back in the day when I first got my first job, it was through the golf business. And that's what I grew up doing for the last 20 years, really. I was a regional and general manager of a golf course. I oversaw about 250 plus employees and about 20 million in revenue. And I quickly learned that I did not want to do that for the rest of my life. It would have been something that I would have had to work till I was 60, 70 years old. So I started looking into other avenues for passive income, and that's when I found real estate back in 2013. And back then I was investing in single-family homes, mainly turnkeys, all out of state, and it was just to get some passive income coming in while I had a full-time job. About 4 or 5 years later, I quickly learned again that it's tough to scale when it comes to single-family homes, especially when it comes to turnkeys. So I started looking for another avenue and listening to some podcasts, stumbled on a couple of mentors online, and signed up for an online course and just fell in love with multifamily. I mean, just the business aspects of it, the business metrics, driving the NOI up, and therefore your property goes up in value. I love that because that was my whole background: operations, driving revenue, controlling expenses. And so I kind of jumped right in, started a meetup, started a podcast, and quickly left my job now about 10 months ago to pursue this full time.
Well, that's pretty exciting. Well, is this your first property that you closed?
It is my first property, multifamily property that we closed on.
Awesome. That is awesome. So I'm looking forward to diving into this because, lately the last couple of episodes we've had that I've been recording have been people that it's their first deal that they've closed, which is really cool to kind of see how people get that very first deal. Because, even some of the big people like Michael Blanc talk about that theory of, the art of the first close or whatever, or, the mindset of getting that first deal closed. Because once you get the first one closed, the second, third, and fourth usually come a lot quicker.
Yeah, absolutely. And I think this is the case too. I mean, we closed on that one about eight to 10 weeks ago, and we have another one under contract now. So the art of the first deal does absolutely.
That's what I was trying to say.
Yep.
The art of the first deal. Awesome. Well, Kyle, talk to us a little bit about this, Midtown on 2nd. That's this 42-unit property in Tucson, Arizona. And talk to us a little bit first about how you actually came across this deal.
Yeah, so this was probably a year ago, we started driving out to the markets. Is how we started introducing ourselves to the brokers out there in the market and getting to learn it, meeting with investors. And so we would leave at 2 or 2:30 in the morning on our day off when we both had our full-time job. And when I say we, my fiance and I, now wife, we would just leave at 2 in the morning on our day off and get there around 9 or 10 in the morning and meet with brokers, tour as many properties as we could, have investor lunches and fit in as much as we could, and then drive back, get back probably 1 or 2 the next morning. And so on one of those visits, we just called brokers on the way, let them know that we're in town. Hey, do you have anything we can possibly see? And one of the brokers called us and said, hey, Kyle, we just got the keys to this property. I haven't really toured any of the units. Would you want to come tour it with us? So we said, yeah, we'd love to. And that's how we found it. So we toured it, and we were the first ones to see it. We got about a 3-week head start until it went to market. And by the time it went to market, we had decided that this was a property that we wanted to go after. And 2 days in, we basically had it under contract.
So were you able to get it under contract before it went to market?
No, they still went to market. The seller wanted to put it to market. I'm not really sure why, because again, like I said, we had it under contract a couple days later. But it did go to market for a couple days, but we had seen it 3 weeks prior.
Now, did you have to compete with other offers?
There were no other offers. We went back and forth a couple times and negotiated. We didn't pay full price for it. We kind of met in the middle. No, there were no other competing offers.
What were they originally trying to get it for?
1.725 was the asking. We ended up at 1.65.
Okay. That's not a bad offering there. And what was it that made them come down off their offer?
You know what? This is an out-of-state owner who's pretty hands-off. I think ultimately she knew kind of her bottom line number, and I think everyone would kind of start high when they're listing their property, right? I mean, you're not really listing it at your bottom number. And so I think there was just some room to negotiate there. And according to the brokers, there was. And so we kind of met in the middle there.
So what was it about this property that got you guys excited about it?
The amount of neglect that the property had. And I say that in multiple ways. The first time I went there, they had a sign on the corner, the only sign with a phone number on it. And we called the phone number and the phone number's disconnected.
Wow.
And this property was not being marketed online. You couldn't find it on apartments.com. Even if you typed in the name of the property, it was impossible to find online. So I knew there was opportunity right there by just hiring a good third-party property management company who had advertising and social media outlets that we can leverage to start marketing the property. So that was number one. And then number two, the owner at the time was just not putting money back into the property. The only time they started turning some of the units is when they decided to sell. They had 6 down units, probably about 8 months prior to her wanting to put the property up to market. And so started fixing those up and things like that. But paint, signage, marketing, the third-party property management company they were using was predominantly a single-family home provider. So any service call, they're getting charged $30 to $40 an hour to, fix a window or whatever it may be. And their expenses were just way out of line because of that. So I knew that if we put a third-party property management company in there that does multifamily, and like I said, who can leverage their social media outlets and marketing outlets and buying power, that this property can be turned pretty quickly.
And obviously, when you found out about this property, you were able to tour it pretty much the same day you guys found out about it. What was it like to tour the property? Were you able to tour a lot of the units, just one of the units? Was it just kind of a walkthrough? What was that touring like?
Yeah, so it was tough to get into many of the units. I think we saw 3 units to start, which actually on a 42 unit is a decent sample size, but you could tell the broker had not been there because he didn't know which key went to what room and so on and so forth. So the cool thing is we spent about an hour and a half there. And so we got to talk to a lot of the residents about what was going on. And they're very open to talk to you if you approach them and you're nice about it. And we just found out that a lot of the service calls weren't being, or the work orders were not being done. They'd have to wait 2-3 months for things to get fixed. The appliances weren't working. The 4 heaters weren't working. So you can just tell there was a lot of deferred maintenance and things just weren't being taken care of like they should be, which is why you had the residents in there that were still in there paying such low rents. I mean, there were some people in there paying half of what we're charging now and have been living there for about 15 years.
So did you have to put any in the back and forth, I guess, some of the offers that you were going back and forth with the seller on this one? Did you have to put up any hard money day one or any earnest money deposit or anything like that?
Yeah, we did a 3% earnest money deposit, no hard money day one. We had 21 days for due diligence, so our money went hard on day 21. So by that time, like I said, we had 3 weeks before it went to market that we were already doing some due diligence on. And by the time we got it under contract, we had another 3 weeks to do some more due diligence.
Okay. So during that due diligence process, can you think of any issues that came up during that process?
Yes. So when I was on the property, the broker had actually told me that the railings were in need of repair per the insurance company. And so I was told that those were going to be redone prior to close. Well, so happens that the owner decided she didn't want to do that. And so when we got a quote, that was a $42,000 expense. And so that was one thing that we had to go back and forth on. We kind of met in the middle. She ended up paying for half of it to get repaired.
Okay. So, all right. Well, that's not too terrible. What was it about those railings that was kind of unsafe? Was it made out of wood? They're just starting to rot, or what was the main concern?
Gaps. So anything more than a 4-inch gap, a baby can crawl through, and there's 4-inch gaps through the whole thing. So we've actually got to rip those out and redo them completely on the whole entire property.
Okay. And so, but that didn't really hold up closing or hold up any of the process. It was really just a negotiation back and forth and being done.
Correct. I would say the only thing that did hold up closing, we used our extension, was going through the first time of dealing with a lender as a first-time buyer was an experience for me, and I learned quite a bit. And, it's always a moving target with the lender, but on this particular deal, we actually had to switch lenders last minute with 29 days left to close and ended up closing about an hour before we were supposed to. And what happened there was that my original plan was we had to raise about $1 million for this deal. And so my original plan was, okay, we're going to do this on our own. We had been building up our investor list for over 1.5 years. We had meetups, the podcast. So we felt pretty good about where we would come in at. And my goal was if in the first 3 weeks we were having challenges with the money raise, we would bring on a partner to help with that and the asset management piece of it. And so 3 weeks in, we were about halfway done with the raise. And I just felt more comfortable with this being our first property. Hey, let's bring someone on. Let's finish this raise and get this thing closed rather than, not know for sure. And so we went back to the mortgage broker at that time we had communicated the plan to. And they said, hey, Kyle, we already submitted the application to Freddie. It's too late. Freddie says no. So you're going to have to do it on your own. And at that point, I had a decision to make whether I was going to continue doing it on our own or, bailing and going with someone else. And as you know, with the 506B, you can't meet any new people. Your investor list is your investor list at that point. And so it was either go back and try and convince some people who have already said no, or bail on it, try and find someone else that can get it done. And we were lucky enough, like I said, kind of in the last hour, to find someone that said, hey, yes, we can get this done. It's going to be a Fannie Mae. So I had to find someone else to actually sign on the loan who had experience. And 29 days later, we were able to raise all the funds and get it closed an hour before we were supposed to.
Wow. So you obviously were using the small balance for Freddie in the beginning, the Freddie small balance, lending program, and then went over to Fannie, which is a little bit of a harder program for a first time investor. Usually Freddie's a little bit more lenient on that. So that's additionally, again, one of the reasons why you had to bring on that extra person for the experience piece of it. Where did you find that person?
Through my meetup that I've been building a relationship with for a while. I mean, I had known him for about a year, and we had actually almost done another deal together that we looked at in the Phoenix market, and we lost out on a best and final. So we knew that we eventually wanted to work together with one another, and he had signed on several loans, and he has several years of experience. And so I called him and asked him, I told him the position that we were in, and he was actually the person who was able to introduce me to the lender that we did ultimately get hook up with to end up closing the loan.
Okay. And so with the financing on this one, how did the financing shake out?
Better, actually, which was a huge deal. And although I hated bailing on the lender at the last minute and doing it like that, it ended up benefiting the deal. It was at that time a couple months ago where the rates just dropped dramatically. And so we were able to qualify for affordability, and the interest rate went down 81 basis points. So we were at a 5.01 on a 10-year, and we ended up with a 12-year at 4.2%, 3 years.
Wow, that is awesome.
Yeah.
Yeah, we're in a similar situation right now where we're being pushed another 2 weeks past our normal closing or our projected closing date, well within our extension period. But, we're actually thankful because the rates are getting ready to be cut again in another week. And so we're looking forward to having even lower, interest rate. So it works out in our favor. So sometimes it works out in your favor, but I know I've talked to some other people that worked in the opposite favor where the actual interest rates went up. And so it made for a lesser appealing deal.
Yeah, that's the tough part with the lending environment. That's the thing that you have to realize is the lender has all the power, right? And so proceeds can change last minute. Interest rate, of course, can change last minute depending on what's going on. And so it's one of those things where, you live and you learn, but you definitely want to be conservative going into it. So just in case something happens, whether the income drops off a little bit on the T3 or, interest rates go up, you need to be prepared for that.
What kind of proceeds were they giving you on this one?
65%.
Okay. So you had to raise a little bit more of the equity up front, but still, made for a less riskier of a deal for your investors too at the same time.
Yeah, exactly. I think it's a positive in the end. We definitely had to raise a little bit more money than we wanted to on the deal, but ultimately, like you said, our debt service is less, and which makes it for a riskier deal, or a less risky deal.
So what's the overall game plan on this property as far as the hold periods and various things like that, and the kind of the CapEx plan?
Yeah, so it's probably 50-50 deferred maintenance to upgrading the units. About half of the units are upgraded right now, and we need to put a coat of paint on it, redo the railings, upgrade some electrical, and redo the signage and marketing. Other than that, it's really upgrading the units as they turn. We've already been able to achieve pro forma rents in year one plus rubs before doing any renovations. We actually start renovations here last week. And so we've already been able to get those pro forma rents, which has been fantastic. The whole period on it is planned for 6 years. However, if we're able to continue with this renovation and get rents above kind of what we're performing at now, once the renovation is done and the market stays stable, then I think we'll be able to probably exit or refi out in year 3.
Okay. And what was the structure that you had with investors on this particular deal?
This one was a 6 pref 80-20 split.
Okay. And where did you find these investors? Now, obviously you had to find them beforehand and you kind of been doing a few things, but where would you say you've been able to find most of your investors up to this point?
It's probably a 50-50 split between friends and family that we've known for a very long time and through our meetup group. That's one of the things that surprised me the most is that we were able to get so many investors from that. And again, we've been doing that meetup group for 15 months, seeing these people on a monthly basis. My wife and I would have coffees, dinners, lunches, even events outside of the meetup to get to know these people and to show them that we're serious about what we're doing. So it was definitely 50-50 between the meetup group and our personal kind of network.
Mm-hmm. And I know you kind of mentioned that you're able to raise kind of 50% of it because you were raising $1 million in equity on this particular project. You were able to raise that first $500,000. How long did it take you to raise that first $500,000? And then how long did it take you to raise that last $500,000?
So that one's kind of a tricky one because we allowed self-directed 401k or self-directed, 401ks. And if you've ever dealt with those, if you're a person with a self-directed IRA already set up, it's a much easier process. But if you're setting it up for the first time and transferring your funds over, it can be quite a long process. And we had 10 of our 25 investors do a self-directed, and 9 of the 10 had to set up their self-directed, once they saw our offering and thought that they would invest. There was one that took 6 weeks to get set up because of the process. Every provider wants, or custodian wants something a little bit different, whether it's wet signatures mailed in. We had one that got sent back because it wasn't legible. So that's why it took so long. So we raised $500,000 in about 3 weeks, but I want to say there was another $200,000 outstanding because of the length of that process. And I was just not sure if those were going to get in time or not.
Now, what was your thought process? Because I'm always curious about this. Not that it's right or wrong, but what is your thought process behind choosing to do the 506B on this one versus to potentially doing a 506C?
Yeah, I would love to be able to do a 506C eventually. I just know my investor base is just not all accredited. In fact, probably 75% of our investors on this first deal were not accredited. And our minimum also was lower than I think you would see most offerings. We were at $35,000 as far as the minimum. And that allowed a lot of the people that, were our friends and family to go in and say, okay, this isn't too much money. We're not putting in like $100,000. We're going to go ahead and try this out and see how you do. And so that was the thinking behind that one. And it ended up working out. I don't think I'd ever do one that low again. Probably $50,000 will be our minimum going forward. But looking forward, I think in deals 3, 4, and 5, eventually we will move to a 506C.
How did you choose 35,000? Because it seems kind of odd. Like I usually seen like 25,000 or 50 or 75. How did you choose 35?
Yeah, that's kind of a funny conversation. My wife and I were sitting there, and originally it was 50. She's like, maybe 25, and I'm like, well, maybe 30, 35. So we just went back and forth until we landed on that number. There was really no math behind it. We knew we needed between 20 and 25 investors. That's definitely something that we knew for sure. We had about 125 on our list that we can contact that we felt comfortable with. And that's kind of how we landed on it. There was no real science behind it.
So once you had this deal under contract and you were going to be raising the money, how did you communicate the deal to your investors and how did you follow up with them?
Yeah, first it was an email basically letting them know about a webinar that we had, and then I would call them as well just to tell them a little bit about the deal once the offering was all set up. And then I told them about the webinar. People hopped onto the webinar, which was about an hour, hour and a half. And at the end of the webinar, I actually typed out the Q&A just in case anyone wanted it, sent them the recording, sent them the Q&A, and then the one thing I didn't do that I would do next time, certainly is follow up with 100% of the people who are on the webinar with a phone call. Especially when you're first starting out. I think you have a lot of people that are on the fence. They're interested. They certainly didn't go onto the webinar for no reason, but I think they just need that little extra oomph at the end to convince them that, hey, this is a good deal, and hopping on the phone and having that conversation and walking them through it and answering any questions that maybe they were afraid of typing out or asking at the time or maybe thought of afterwards would have helped tremendously. But I did eventually do that about a week and a half later, and then just several emails and follow-up phone calls.
Yeah, I had just thinking about back to your issues with the setup of those 4 self-directed IRAs and 401ks. I had a conversation with a former fund manager, and one of the things that they do for their clients and their investors is they actually have what is called I don't know if they call it like the white glove self-directed IRA setup or whatever, but they actually have somebody on their team that actually holds their hand through the entire process to make sure they're actually doing things the right way. And it kind of sets them apart from everybody else that just says, here, go set up an account and come back. They actually no, come to us. We'll get your information. We'll fill out your forms for you. We'll tell you where to sign, where to mail it, get the FedEx prepaid envelopes or whatever, and kind of get those accounts set up, which I thought was really, really kind of unique and a cool idea to kind of stand out.
I would love to know who that is for sure, because it's definitely something that would stand out. A lot of our investors had struggles filling out the paperwork, knowing what to do. It's just an added step, right? And that's why some people don't take self-directed IRAs. And it definitely slows down the process. So if you can introduce some type of white glove service like that, I think that would go a long way with the investors.
Yeah, absolutely. One of the other things I was going to ask you is throughout this entire process, can you think of any issues or interesting things that came up that we might not have talked about yet?
I think just setting up my team in advance. I think I did talk about it a little bit, but it's just communicating everything in advance. I told the mortgage broker over the phone what my plan was, but it was never in writing. And so I just think it's just to be transparent and upfront with, hey, look, we're not sure if we're going to be able to do this all by ourselves. We're going to bring in a team of people at this date. So this is what needs to happen. When you're doing a deal for the first time, I think you don't know what you don't know. So I did not know that, once you submit an application to Freddie, they pretty much underwritten everybody. And so to bring someone new on, they have to underwrite the team again. And so that's an added step. Now, the one thing I didn't say is that at the end, when I did bail on that mortgage broker, they said, hey, Freddie came back and said they can do it. But at that point, I had been asking for about 3 or 4 weeks. And it was apparent that they just weren't willing to help. And so, we had to jump ship and go with someone that was willing to help. But the interest rate also didn't hurt. But I would just say setting up your team in advance, not trying to do things on your own, especially for your first couple deals. It's worth giving some equity up in order to be sure that you can close the deal.
Now, when you walked away from Freddie like that and that other broker, did you also walk away from those fees that you had paid that particular lender?
We were able to transfer some of the third-party reports and fees over from Freddie to Fannie. However, we did lose some money on that. And what we did is lowered our acquisition fee so that we took the hit on that, because ultimately it was my decision. Yes, we did get a lower interest rate, but that was not set in stone, because with Fannie, you can't lock your interest rate until about a week before you close. With Freddie, you can. So we weren't sure where that was going to all lay out. So we did take the hit on the acquisition fee just to make sure that the investor's money was still, or the investor returns were still where they need to be.
Mm-hmm. All right. So I have 2 final questions for you as we're wrapping the interview up here. And the first, they're both kind of contrasting questions. So the first question is really kind of, what did you find was easier during the entire process that you thought originally might have been a little bit harder?
Yeah, that's a good question. This whole process was very difficult for me, for sure. I don't know if there was anything really easy about it.
Maybe finding the deal.
Yeah, finding the deal was probably the easiest part. There's just, when you're going through something for the first time, you're learning a lot. Actually, one thing that did surprise me was how easy it was to work with a broker. Typically the broker's working on the sell side, working for the seller. Yes, they're kind of a dual agent, but this particular broker did a fantastic job. If I asked for something, I would have it in my inbox within 10 or 15 minutes. And working with other brokers, they just don't work that way. A lot of them are off at 2 or 3 on Fridays. They don't get back to you till Monday, and that's how it is. So really working with that broker was great.
So on the flip side, which I think I know how you're going to answer this question, but what did you find was harder than you had originally expected during the entire process?
Yeah, both raising money and dealing with the lender. Both of those things, I'm still, just dealing with lenders going forward is something that you're always going to have to deal with. And I've talked to many people about, hey, does it ever get easier? And the answer that I've gotten so far is no, it doesn't. It's because it's a moving target. So you just have to be really conservative. It's a competitive market right now and everyone wants to get deals, but it's not worth getting deals if you're not getting good deals. And so just be conservative on your underwriting and make sure that you work with your lender to understand what the worst case scenario could be.
Yeah, that's great sound advice. And, I would definitely, second that and say that every lender is going to be a little bit different and they're a little bit different on every property as well. So,
yep.
Even though you might have had a smooth sale with one property, the next property might not be so much. So definitely some good advice there. So how can the listeners reach out to you, Kyle, if they have further questions for you about this property or maybe some future opportunities that you might have available or, maybe even want to follow you a little bit more too?
Yeah, absolutely. So we've got a podcast out as well. It's called Passive Income Through Multifamily Real Estate. Our website is www.limitless-estates.com. And I'll just go ahead and give out my phone number because I love talking to people. It's 562-833-5010. And I'd love to help you in any way that I can.
Say that phone number one more time.
562-833-5010.
Well, awesome. Well, Kyle, again, thank you so much for sharing all these golden nuggets around this property and looking forward to continuing to follow you and having you on a future podcast as you continue to close more deals.
Yeah, thanks, Dan. Had a great time.